Good morning. This is Monday Mornings with Money Show, special Tuesday morning edition for the Tuesday after Labor Day, September 5th. Hope you had a great holiday weekend. Looks like we're starting off the market activity a little slow here, just as we finished off last week with a bit of a mixed bag for equities. We do have crude oil popping a little bit here on a headline that Saudi Arabia is going to be extending its production cuts all the way through the end of the year. So that's giving oil, which had a 7% up week last week, a little bit more of a boost in the early going. As for the markets, I think one of the biggest things we're going to be focusing on is what happens with the latest tech IPO or big tech IPO that SoftBank is trying to push through. SoftBank Group has filed to sell 95.5 million ADRs, American Depository Receipts of ARM Holdings. They're looking for a price range of $47 to $51. And if that happens under the ticker symbol ARM, it will raise about $4.9 billion, which would make this the biggest IPO of the year, not just tech IPO. And I think a lot of tech companies are hoping that this will reignite a tech IPO market that's been essentially dead for the last few quarters. In other news, we had a little bit of a Chinese developer real estate bust concerns that have been floating around the market for the last couple of weeks. Although Country Garden Holdings is a company that had to pay some interest on dollar-based bonds, it did manage to hit those payments before the grace period ran out, which meant we did not have another default to deal with there. Sort of eased some concerns on that front. And it's worth noting a lot of Money Show speakers that have spoken at live and virtual events recently have talked about the value that's available in emerging markets, in China in particular, just because sentiment is so negative there. Finally, I would highlight a Wall Street Journal story which talks about how utilities are dramatically underperforming the markets with a loss of about 12% year to date. That makes utilities the worst performing sector in the S&P 500, given that the S&P is up about 18% year to date. What's going on? Higher interest rates are hurting the value of yield alternatives, bond alternative sectors like high dividend utility stocks. Plus, the economic news has gotten better, so people have been rotating out of defensive sectors like utilities and into bolder, more offensive sectors. That's one reason I shifted my stance from the be boring investment stance I'd been recommending from mid 2021 through the end of 2022. At the beginning of this year, there were a lot more reasons to be optimistic, and I suggested you switch to a be bold approach, which so far has been working. Again, this has been Mike Larson with Money Show. Hope you have a great trading week. We'll talk again soon.